We'll begin with the concept of markup and which one? Markdown. Before we go for this markup and markdown, we prepare which account? Departmental trading P&L account in a columnar format. Where we record Department X and Department Y. What and all we record in the trading account? Opening stock, purchases, direct expenses, and of course credit sales and closing stock we record. What we learned is interdepartmental transfers. How to record interdepartmental transfers? Debit the receiving department and credit what? Transferring department. Debit the receiver, credit the receiver rule you can follow, or credit the income. For the transferring department, it is like what? Income. For the receiving department, it is like expense. Okay. So you prepare a departmental trading P&L account. And you prepare a general P&L account to allocate which one? Indirect expenses. Salary, rent, all those things are apportioned on a suitable basis. We have done a question based on that also. Like this question we have done by allocating various expenses to various departments. Okay, one question we have done with allocation of different expenses to different departments, like this question, where we allocated salaries and wages, advertisement, rent, and all we have allocated, and we worked out net profit. Then interdepartmentally transferred stock sometimes will be taking place at what price? Invoice price. When there is an invoice price, which means stock is at invoice price, we remove the loading in general P&L account by preparing a general P&L account. How to remove the loading? Against opening stock in the credit side, against the closing stock in the debit side, we remove the loading. Then opening stock will be at last year's GP ratio. Closing stock will be at what? Current year GP ratio. We have also done like a rectification question. Clear? So where departmental stocks are included at profit, we eliminate the profit, we work out the correct commission like that. We take the profit, we add back the wrong commission, we eliminate the loading or stock reserve, then we work out which one? Correct commission like that. We have also done that particular model. Now we'll move on to the concept of markup and markdown. Simple. What is markup? Recording the stock at invoice price. Recording the stock at what price? Invoice price. And please remember, this markup account and markdown account are not part of your regular books of accounts. Will it come in your regular journal, ledger, trial balance? No. They are called as memorandum books. They are called as what? What is a memorandum book? A working note, a rough account. Why are they recording the stock at invoice price? Why are they recording the stock at invoice price? For example, if you look at departmental stock account, okay, if cost is, for example, when you are purchasing goods for 1 lakh, when purchases are like 1 lakh, probably they will mark up with a profit like 50%, on cost 50%, they will record at 1,50,000. What do they record? The stock itself at invoice price. Please remember, this is not your regular books of accounts, not part of your trial balance, not part of your which one? Regular journal. Journal will be passed for purchases for only how much? 1 lakh. But in the stock account alone, okay, memorandum stock account alone, they are going to record at what? 1,50,000. Why? Not for departmental profits, to ensure that the stock will be sold at 1,50,000. Okay, when you know the cost, the departmental managers may alter what? The profit margins. Okay, for example, when I give for example, there are 4 or 5 departments, when I keep the goods at what price? Cost price, there is a chance that one may be sold at 20%, another may be sold at 25%, another may be sold at 40% profit margin, or sometimes the customers might negotiate and purchase at different prices. So we are going to record the stock itself at what price? Invoice price, so that when these goods are sold, you ensure that you are selling for 1,50,000. You are selling for what? 1,50,000. If you are selling the goods for more than 1,50,000, that is supernormal profit. Okay. If you are selling the goods below 1,50,000, that is called as markdown. Clear? For example, what is markup here? 1 lakh plus 50%, 1,50,000. Suppose if I sell the goods for 1,50,000, yeah, actually, whatever is required, we earned. Suppose if we sell for more, supernormal profit. If it is going to be like, if it is sold below the price, it will be called as what? Markdown. It is called as which one? Markdown. Why this is done? Simple. Number one, not to disclose the profit to departmental managers, because they may demand more salary, more commission. Number two, to maintain a uniformity in fixing the selling price to the customers. And as I told you, this will not come in your trial balance. This is only for operational convenience. This is only for your operational convenience. So under this method, 2 accounts will be prepared. One is called as which account? departmental stock account and departmental markup account. Where on the purchases, what is the markup done? 50%. That will come in the departmental markup account as buy stock. Buy stock, how much? 50,000. The loading part alone, like a stock reserve, the loading part alone will come in which account? Maybe you would have prepared branch adjustment account. Do you remember? So on the debit side items, you'll remove the loading on credit side. On the credit side items, you'll remove the loading on which side? Debit side, like that. The same concept is applied here, but in a different way. Okay, let me take up an example to make you understand, or to make you a better understanding, to give you a better understanding. Look at this. Opening stock. What is opening stock? 10,000. What is the purchases? 1 lakh. Markup is cost plus 50%. Okay, this is the different types of items of stock sold during the year or stock handled during the year is given to us. An item costing 40,000 sold for how much? 60,000. An item costing 30,000 was sold for 50,000. An item costing 20,000 is sold at 18,000. Some goods costing 5,000 is last and 15,000 closing stock is there. Now this is the cost of the goods. This is the cost of the goods. Now what will be the markup? Markup eவ்வளவு percentage? 50%. 40,000 into 50% how much? 20,000. 30,000 plus into 15% will be 15,000. 20,000 plus 50% will be 10,000. 5,000 plus 50% is 2,500. This is how much? 7,500. So this will give us a normal selling price. Normal selling price 40 plus 60. 40 plus 50%. How much it will be? 60,000 is a normal selling price. But look at this. This is sold at how much? 60,000. It is sold at normal selling price. Look at this. 30,000 plus 15,000. What is the normal selling price? 45,000 is a normal selling price. It is sold at how much? It is sold at 50,000, means more than the normal selling price. Then this one, 20,000 plus 10,000. What is expected selling price? What is expected selling price? 30,000. But it is sold for, okay, let us keep it as 28,000. It is sold for how much? 28,000. Which means what is the normal selling price expected from the customer? 30,000, but sold for 28,000. Some items having an invoice price of 7,500 is lost. Some items having an invoice price of 7,500 has been lost. And closing stock, what is the normal selling price of closing stock? 22,500. 22,500. Now, what is the opening stock or the cost price? 10,000. So what will be the market price? Plus 50% add panna, it will be how much? 15,000. Okay. Purchases plus 50% add panna. Plus 50% add panna 1,50,000. If you look at the analysis, what is the total of opening stock plus purchases? 1,65,000 is like normal selling price. Otherwise, opening stock and purchases, the normal selling price of these goods are how much? 1,65,000. You can add and see also. The normal selling price of these items are totally how much? 1,65,000. Otherwise, what is opening stock cost? 10,000. What is the purchase cost? 1 lakh. Look at the cost of items. Some cost 40 plus 30 plus 20 plus 5 plus 15. What is the total of cost? It will be like 1,10,000. It will be like what? 1,10,000. What is the normal selling price of these goods? 1,65,000. But do you sell everything at normal selling price? Do you sell everything at normal selling price? No, we don't sell. Certain goods may be sold at normal selling price. Certain goods may be sold at what? More than the normal selling price. Certain goods are sold for what? Less than the normal selling price. Certain goods are lost and certain items are there in which one? Closing stock. Now, how to prepare the memorandum account? As I told you, this memorandum account will be maintained at what price? This memorandum account will be maintained at what price? Invoice price. Invoice price. Normal purchases will be maintained at cost price. This will be maintained at invoice price. For example, to opening stock, or you can say to balance brought down. To balance brought down. What is the cost of the goods? What is the cost of the goods? 10,000. It is marked up plus 15%. How much it will be? 15,000. To purchases. Oh, sorry, 50%. 50%. It is recorded at 15,000. Purchases. What is the purchases? 1 lakh. When I mark up 50%, that will be 1,50,000. So whatever I mark it up here, that will be recorded in departmental markup account. That will be recorded in which account? Departmental markup account. It will be like by balance brought down. This is on opening stock. Same like opening stock reserve. Opening stock, what is the markup? 5,000. Markup alone will be recorded here. By purchases. By purchases, what is the markup done on purchases? 50,000, but we won't put purchases. We'll call it as departmental stock. This is nothing but what? Markup on purchases. Markup on purchases. Now, simple, pay attention. Let us assume all the goods are sold at normal selling price. Let us assume opening stock plus what? Purchases. Everything is sold at normal selling price. By sales, it is made at how much? 1,65,000. Everything is, ignore this information. Let us assume everything is sold at normal selling price. Now there will be no closing stock. There will be no closing stock. Whatever is marked up is earned. This will be known as gross profit. What is the gross profit? 55,000. Otherwise, on the stock, how much you marked up? 50%. What is the markup? 5,000 plus 50,000. What is the total markup? 55,000. I sold all the goods at the same market price for 1,65,000 means whatever is marked up will be your gross profit. Whatever is marked up will be your gross profit. Lesser than you can just prepare a departmental trading profit and trading account to understand this. For example, here we will record, this is a normal books of accounts. To opening stock, we will normally record at what price? Cost price. What is opening stock? 10,000. No, cost price, 10,000. To purchases, what price? 1 lakh. I told you we sold all the goods. We sold all the goods for how much? 1,65,000. Na? Tally panna, what will you get? To gross profit. To gross profit as a balancing for how much you will get? 55,000. So instead of preparing one departmental accounts, we are going to do which accounts? Departmental stock account and departmental which account? Markup account. One point that you have to understand over here is whenever the stock is marked up, the stock is recorded at what price? The invoice price. And please remember, these are all memorandum books, not part of your regular books of accounts. This is to exercise control over stock, sales, and to see whether the profit is earned or not, to have a control over profit on different items. And whenever the markup is done, the markup element alone, the profit element alone is recorded in which account? Departmental markup account. Now, in this example, did we sell all the goods? No. Come to this example. Once again, opening stock, cost plus 50%. Purchases cost plus 50%. We record to balance brought down 15,000 to purchases 1,50,000. Here we recorded by balance brought down on opening stock, markup on which one? Purchases we recorded. Look at this. Look at this sales. This part of sales. What is the normal selling price of these goods? 40,000 plus 20%. Sorry, 50%. It is how much? 60,000. It is sold at how much? 60,000. Wait, do you require a further markup or markdown? Sir, what is the cost? 40 plus 50%. What is the normal selling price? 60,000. Sold at 60,000. No markup or markdown is required for which one? This 40,000. Look at this 30,000. What is the normal selling price? 45,000. It is sold at 50,000. Sold at 50,000. There is an additional profit. There is an additional profit that we will mark it up. Markup. How much we mark up? 50,000 minus what? 45,000. What is the additional profit that we earn? 5,000 on the stock. That will be recorded in stock account also. By which one? Departmental stock. By departmental stock, that goods which were sold at more than the invoice price. More than the invoice price. We earned extra profit how much? 5,000. We earned extra profit how much? 5,000. So wait, pardon. Markup account, it will be credited whenever you are selling the goods at more than the normal price. This is normal price. More than the normal price, whenever you are selling an item, we will mark it up. We will mark it up. Look at the next one. 20,000 plus 50%. Expected selling price is 30,000, but we sold it at 28,000 now. It is sold for it is not a loss. Sold for less than the normal selling price. Sold for the less than the normal selling price. How it will be done? There is no separate account called as markdown account. Okay, it will be called as still markup account only. It will be called as which account? Markup account only. How much? 30,000 minus 28,000. It is called as markdown. It is called as which one? Markdown. We don't have a separate account called as markdown. Markup itself, it will be reduced. How much will be reduced? 2,000 will be reduced. Now this will come in the markup account as which one? To departmental stock. 30,000 minus 28,000, or you can call it as markdown also. Instead of using the word markup, you can call it as which one? Markdown also. But since it is not part of regular books of accounts, it is only a memorandum books of accounts, you can use any name, any title in this. So what is a markdown in this? 2,000. Otherwise, 55,000 is the expected profit. Some goods were sold at extra 5,000. Some goods were sold at less than the 2,000 normal selling price, you mark down. And some goods were lost. Some goods were lost. That abnormal loss, okay, we'll record by sales. By sales is nothing but 60,000 plus 30,000 plus, 60,000 plus, what is the actual sales? 50,000 plus 28,000. 60,000 is not normal selling price, no markup or markdown. For this 50,000 already we marked up how much? That 5,000 already we marked up. For this 28,000 already we marked down 2,000. So what is the sales? 1,38,000 by abnormal loss. Abnormal loss, okay, 7,500. This abnormal loss is at which one? Normal selling price. Normal selling price. On this, what is the profit element? 2,500. That will be removed here. To departmental stock on abnormal loss. The profit element in which one? Same like your branch stock account. What is abnormal loss or the profit element? 2,500. Then by balance carried down is nothing but closing stock. What is the closing stock? Selling price? 22,500. 22,500. For this, we will maintain what? To balance carry down. This is on which stock? Closing stock. What is the closing stock like the profit element? What is the closing stock like the profit element? 7,500. When you tally this, you will get gross profit. When you tally this, you will get which one? Gross profit. Same like branch adjustment account. This is same like your stock and data system branch adjustment account. How much profit? 48,000. And if you look at departmental stock will tally. In this question, since all the details are available to us, okay, the departmental stock will what? Tally and should tally. Is it tallying? Yes. Wait, for this question, when you prepare a departmental trading account also, the same gross profit we should get. By sales, what is the sales? 1,38,000. Sales is 1,38,000. What is the journal entry for abnormal loss? Abnormal loss accounted to trading account. By abnormal loss. By abnormal loss, here we will record in trading account at cost price. What is the cost price? 5,000. By closing stock, what is the closing stock cost price? What is the closing stock order cost price? 15,000. Closing cost or cost price is 15,000. When you tally this, you should get the same gross profit. This is your regular books of accounts. This is your regular books of accounts. How much you get? 48,000. 48,000. Once again I repeat. Under markup and markdown, goods are recorded at what price? Invoice price. A usual profit margin or a normal profit margin is added and recorded. Clear? So whenever goods are purchased or opening stock, they are recorded at what price? Invoice price or loaded price or marked up price. That marked up amount goes to which account? Departmental markup account. That profit element is recorded. Same like branch stock account, branch stock adjustment account. Clear? We record opening balance, goods sent to branch. Here we will put buy stock reserve, buy goods sent to branch, that profit element. Same method. Then, whenever goods are sold at the same markup price, any adjustment required? No adjustment required. When the goods are sold above the normal selling price, when the goods are sold above the normal selling price, then what is the extra markup we have done?
5,000.
45,000 is expected normal selling price. It is sold at 50,000 now. The extra 5,000 is marked up. Extra 5,000 is marked up and recorded here. This is the markup on sales. This is a markup on which one? Sales. When the goods are sold below the normal selling price, it is not a loss. It is not a loss. It is sold below the normal selling price. Then it is called as which one? Markdown. How to mark down? Just do the opposite. Whenever you are marking up, the stock is debited. Whenever it is marked down, the stock is what? Credited. And of course, we did not able to achieve the normal profit margin, adjust in departmental markup also. Then, abnormal loss, what is the markup price? 7,500. Other profit element how much? 2,500. What is the closing stock normal selling price? 22,500. In that, what is the profit element? 7,500. Sales, of course, you can record. Since we have already adjusted for markup and markdown, sales you can record at normal price. You will get gross profit. This is markup and markdown method. Markup and which one? Markdown method. Ignoring the markup and markdown, when you prepare departmental trading account, opening stock in normal books of accounts. This is normal books of accounts. Recorded at what price? Cost price. Purchase is recorded at cost price. Gross profit, of course, balancing figure. Sales, abnormal loss, journal entries, abnormal loss account to trading account. Closing stock is recorded at what price? Cost price. This gross profit is the realized profit. Or, okay, we can work out the gross profit like this also. Look at this. What is the markup here? What is the markup on this first line item? 20,000. This one, 15,000 plus 5,000 extra. Okay, once again, do it in calculator. 20,000, 15,000 plus supernormal profit. How much we earned? 5,000. So 15,000 plus 5,000, 20,000 plus already 20, 40,000 acha. On this 10,000 we should have earned, but we sold for 2,000 less. So 8,000 profit realized. 48,000 profit realized. That is what is the profit. Okay, like this, don't try to verify in the exam question, because markup, markdown, sometimes that may not be in exact percentages. There may be abnormal loss during the year. Stock held may be marked down, stock held may be marked up, like that they may give you information. This is just to make you understand that departmental stock is maintained at what price? Invoice price. What is the reason? We want the departmental managers to maintain the selling price, to maintain cost plus 50%. Okay, when they sell for more than the markup also, you should explain. Because, wait, to the customers, when you sell the goods for more than the markup price, is it advantageous to the company? Yes. But in the long run, it is not good, because customer, when they compare the price outside, they will feel that they are cheated. Okay, you are marked up more than the normal selling price. Okay, marking up more than the normal selling price is not good. Marking down below the normal selling price is bad for the company directly, because it is hitting a profit of 2,000. But sometimes dead stocks, slow moving items which are nearing the expiry date, we cannot sell it at a normal selling price. We have to sell it at what? Below the normal selling price. So whenever there is an additional markup done, explanation will be given by the departmental managers. This is for MIS, controlling the company or whatever. Whenever the goods are sold for less than the normal selling price, then the departmental manager should explain why they are sold for less than the normal selling price. Okay. And abnormal loss, they have to explain what is the reason. And of course, closing stock, we can verify and check what is the cost, etc. So this method exercises what? Full control over not only on stock, not only on abnormal losses, not only on closing stock, but also on at what price you are selling, So that is the advantage of this method. And please remember, this departmental markup account, departmental stock account, we'll just prepare, we'll verify, tear it and throw it. At the end of the day, what matters is, what goes to your final accounts record? Departmental trading account only will be prepared by the concern. So markup and markdown is only for the purpose of which one? Control. Now have an organized note. Have an organized note. Then let us continue with this example. Start. Departmental accounts markup. It refers to recording the stock at invoice price. It refers to recording the stock at what price? Invoice price. I would have taken the theory directly, then we will not realize that importance or we will not get the grip of it. That's why I've gone for an example. Okay. Recording the stock at what price? Invoice price. It is also known as cost plus markup. It is also known as cost plus markup. Start. Recording the stock at what price? Invoice price. Cost plus which one? Markup. Number 1. Opening stock or purchases are recorded at cost plus markup. For your reference, you can take it as normal selling price or invoice price. The amount marked up is recorded in or credited in which account? Memorandum markup account. Shall we leave around 3-4 lines of gap at the getting? It's like a theoretical one. Departmental stock account, or you can say memorandum departmental stock account. Better to use the word memorandum departmental stock account so that your mind also will register it is not your regular books of accounts. To balance brought down. This will be at cost plus. Leave around 5-6 lines of gap and come to this. To purchases, of course, this will also be at cost plus. Now for this memorandum departmental stock account, leave around 4-5 lines of gap. Point by point, let us go ahead. Memorandum, which account? Markup account. There is no markdown account, only markup account is there. In that itself, markdown will be adjusted. By balance brought down. This is like a stock reserve. Markup on which stock? Opening stock. Markup on opening stock. In some textbook, they use the word purchases account. In some textbook, they use the word what? Stock account. This is nothing but what? Markup on purchases. Markup on which one? Purchases. We'll go with suggested answers. We'll go with suggested answers. Okay, so memorandum departmental stock account led to balance brought down at cost plus we record. In the markup account, whatever is marked up, that is recorded here. Done. Now come to the theoretical notes. Point number 3. Point number 3. If goods are sold at normal selling price, goods are sold at normal selling price, no adjustment required. If goods are sold at normal selling price, no further adjustment is required. No markup or markdown. if goods are if goods are sold goods are sold above the normal selling price. Goods are sold above the normal selling price. If the goods are sold above the normal selling price, then what do? Additional profit is marked up, where we will put to markup account. Done. Then number 5, if goods are sold below the normal selling price, the difference, okay, we can say normal selling price minus which one? Actual selling price is called as which one? Markdown. We don't call it as separate markdown account is not there. So that will also be recorded in which account? Memorandum markup account. It is not a proper ledger or journal, just a memorandum book. Stock use panna po. Then in the memorandum stock account, what do we record? Sales. Whatever is the sales, we record. Then by abnormal losses, we record. Because it's a reduction of stock, abnormal loss we record. Then we record which one? Closing stock. Same thing we record to stock account. This is nothing but markup in abnormal loss. This is on closing stock. See, here additional information may be given. Goods may be transferred from one department to another department. Goods may be transferred from one department to another department. By transfer, we'll record in one department, credit the giver, that markup will be removed on the opposite side. Such things we'll come to that later. Okay. Transfers also will be taking place at what price? Markup price. So for transfer also we have to record and remove that particular markup or whatever. So when you tally this memorandum markup account, what will you get? Gross profit. In this, what complication that can be added is in the examination, number 1, closing stock may be a missing figure, or sales may be a missing figure, or abnormal loss may be a missing figure, or sometimes they will give you in the closing stock certain items are having poor selling line, we have to mark down. In the closing stock, some items cannot be sold for normal selling price, we have to mark down, like that they may specify. Or in the opening stock, some items are having poor selling line, we have to mark down, like that they may specify. Clear? Or sometimes, okay, the abnormal loss, they may give you a different value also. So this is the base. A complication can be added through plus and minus in the valuation of closing stock or opening stock or in certain items sold or certain items lost, etc. Transfers they can add. Transfer very simple. Credit the giver and what? Debit the receiver rule. On the transfer also the markup and markdown will be removed. Simple. This is like branch stock account. This is like branch adjustment account. Now take up this example. Take up this example. Markup is cost plus 50%. This is the data about opening stock and purchases. Take up this data first. Have we taken up this? Stock is recorded at invoice price. Why? You want to have a control over which one? The sales. So we want to ensure that the managers are selling or departmental people are selling for this normal selling price. If goods are sold below the normal selling price, markdown. If the goods are sold for above the markup price, it is called as what? Markup, further markup. And of course, there may be abnormal losses or there may be closing stock. That will be at marked up price. So we have to eliminate profit to find out the realized profit. Shall we? We maintain debit items at invoice price. How can you record credit items at stock cost price? When all line items are recorded at invoice price, credit also should be recorded at what? The same invoice price so that you get a proper closing stock or abnormal loss. If opening stock purchases are recorded at cost, then closing stock you can record at what? Cost or abnormal loss you can record at cost. That's the reason. Now shall we prepare? Pay attention, then you can take it up. This is the first question that we work out. Simple question, I'll solve pannidren. Difficult question you will work out. That is from past exam question we'll see. So what is the opening stock? 10,000 plus 50% marked up, that will come in markup account. Then purchases 1,50,000, the markup alone will come in which account? Markup account. Otherwise, if all these goods would have been sold, what is the profit realized? 55,000. For this item, no markup or markdown is required. For this item, what is the markup, extra markup required? 5,000. Okay, extra sales, extra selling price, record in which account? Markup account. Extra sales you record in markup account. Then it is sold for less than the normal selling price, it will be marked down. So record it in it. Departmental stock marked down. Then goods lost. What is the goods lost? Okay, before that, what is the total sales? 60 plus 40, 5 plus 30. What is the total sales? 60 plus 50 plus 28. What is the total sales? 1,38,000. Goods lost by abnormal loss, on that profit element is removed. Then on the closing stock, by balance carried down, 22,500 is the invoice price or selling price. On that we remove the profit element to balance carried down. Then gross profit is nothing but what? The balancing figure. How to verify my answer, sir? You can prepare a departmental trading account, but that is not required for examination point of view. Only for verification point of view, we do it and we verify our answer. Take up this.
The alternate what?
Oh.
Last
The last 1 year கேட்கல நினைக்கிறேன். மேலையும் கேட்கல, நவம்பர்லையும் கேட்கல. May 22 also they have not asked. November 22 also they have not asked markup and markdown. The probability is there. Now in the question, extra complication can be in the closing stock certain items are marked down, like that they may give you. In the closing stock certain items are marked down. How to do it? Simple. To mark down, here mark down you will record, that's all. And please remember, marking up is always a profit, marking down is always a loss. Loss மாதிரி, அதாவது you lose the normal selling price. It's a verification for us.
The exam like question get and then upon
Departmental stock account, markup account you have to prepare. Actually the markdown, but we don't record as, we don't have a separate markup account. So markdown account, அதனால it is recorded there. Have we taken up this? Have we taken up this? Look at question number 16. Question number 16. 16. The same question is in November 2013. Go to question number, which one? 16. Vamsi Limited has several departments. Goods supplied to each department has been debited to memorandum departmental stock account at a fixed markup. At a fixed markup. Page number 90. Page number 90. At a fixed markup கொடுத்திருக்கோம். Wait. Read this question. Read this question. First three paragraph is to explain the theory of markup and markdown. Nothing to do with solution to the question. They prepare a departmental stock account at cost plus how much? 50 some percentage markup to record at what price? Normal selling price. The markup creditors to a memorandum trading account called as which account? Markup account. The profit is recorded at markup account. Any reduction in selling price, markdown will require adjustment in which account? Stock account and which account? Markup account. It is nothing but they are giving the theory of which one? Markup and markdown. Whatever they have given us 4 lines, they are giving it. That's all. The markup for Department A in the last 3 years has been how much percentage? 25%. Cost plus 25%. The figures relevant to Department A for the year ending 31st March 2018 is given to us. Opening stock value கொடுத்திருக்காங்க cost. So while recording in stock account, what will you record? 65,000 plus 25%. Purchases you will record 2 lakhs plus 25%. That whatever is marked up, you will record in which account? Memorandum stock account. Sales you will record as buy sales, that's all. Buy sales, that's all. Then look at that. Shortage of stock found is nothing but abnormal loss. Nothing.
Department stock.
Same like what we have done here.
Opening stock at cost and
We have to record at what price? Markup price. Firstly, instruction கொடுத்துறானே. Record the thing at what? Markup. Firstly, என்ன கொடுத்துருக்கான்? Prepare the stock at what? Cost price or markup price? ஒரு மணி நேரமா
போட்டதுனால நீங்க என்ன சொன்னீங்க?
Okay. Cost plus price departmental stock is maintained. Whatever is done there, it will be recorded in which account? Departmental markup also. Then wait பண்ணுங்க. Shortage of stock found means which one? Abnormal loss. Abnormal loss. Cost எவ்வளோ? 1000. How will you record the abnormal loss? By abnormal loss, cost plus 25%. Whatever is that profit element will be removed in which account? 250. Then opening stock includes goods costing 6,000 has been sold during the year. Marked down selling price by how much? 600. Doesn't matter is it opening stock or whatever. It is sold for less than 600 means less than 600 less than the normal selling price means they have given directly this markdown amount. Stock account by markup account. That markdown you will reduce how much? 600. Inga vandu you will put to stock account for the markdown how much? 600. Then what is the next one? Goods purchased during the year was marked down by how much? 1,500 from the cost of 15,000 கொடுத்திருக்காங்க. Marked down. Okay. Departmental closing stocks to be valued at cost subject to the adjustment of markup and markdown. Okay. Prepare which account? Memorandum stock account. Memorandum which account? Markup account. Apart from that, they ask you to prepare which account? Trading account also. In this question, they ask you to prepare which account? The third part that we used to verify, this trading account also they ask for. Here, third point has one missing information. Goods purchased during the year marked down by how much? 1,200 from the cost of 15,000 கொடுத்திருக்காங்க. அது வந்து cost of those goods. Cost of the goods 15,000. அதுல எவ்வளவு markdown மட்டும் adjust பண்ணா போதும். Only the markdown we need to adjust. Okay. Here, one more information is missing. One more information is missing. Please note. 1/3 of the goods remained unsold. 1/3 of the goods remained unsold. 1/3 of the goods remained unsold. 1/3 of the markdown goods. The 15,000 5,000 of goods remained what? Unsold.
Cost na adu plus 25% போடுங்க.
அது already record பண்ணிருப்போம். Opening stock already we would have this purchases opening stock already we would have recorded at what? Cost plus 25%. Now we are wait. Every transaction we have to adjust the profit or only the markup and markdown amount. Only the markup or markdown component you have to adjust. For example, whenever there is a extra profit, markup. Whenever there is a reduction in profit, you mark down, that's all. No need to adjust for normal profit because normal profit would have been already included. So 1/3 of the stock remained what? Unsold. 1/3 of the stock remained unsold.
Sir, 1/3 and 15,000.
15,000 la 1/3.
Sir, but விக்கும் போது தானே markup ஆயிடலாம், markdown இருக்காது.
When there's a reduction in selling price, they can mark down also. For example, when they say that today I can sell this only for 500, I can mark down or markup. Departmental closing stock has to be valued at cost subject to the adjustment of the markup and markdown கொடுத்திருக்காங்க. They ask you to find out the memorandum stock account, they ask you to prepare, markup account they ask you to prepare. Try பண்ணுங்க. And please remember, opening stock will be 65,000 plus 25%. Purchases will be
20 plus
2 lakhs plus 25%. Sales will be recorded at actual values. Okay. Only when there is a further markup or further markdown that you have to adjust in which account? Stock markup, stock markdown, like that you have to adjust. Try பண்ணுங்க.
15,000 by 3.
In the 15,000 la 1/3 remained unsold. 5,000 remained unsold. No, apart from that, balance stock also will be there. Balance stock also might be there.
5,000 like markup கிடையாது, markdown.
இருக்கு. Think பண்ணுங்க. 15,000 க்கு எவ்வளவு மார்க் டவுன் பண்ணிருக்கோம்? 1,200 னா அந்த க்ளோசிங் ஸ்டாக் 500 ல எவ்வளவு மார்க் டவுன் பண்ணணும்? You have to think. For 15,000 of stock during the year we marked down how much? 1,200 means for that closing stock how much we need to adjust, like that you have to think. See, record everything else except the closing stock. Except the closing stock, I will come to that. Shall we? Okay, I'll wait. Should have at least done this part correct. 65,000 plus 25%, or you can say 125%. 2 lakhs plus 25%. So that will come in which account? Markup account. Opening stock 65,000 plus 25%. 2 lakh plus 25%. Further markup or markdown will be adjusted in the account. From the opening stock, how much is marked down?
600.
600. So 600 mark out panna enna pannu? By
Markup.
markup account. By markup account. That is nothing but markdown of opening stock. This is nothing but markdown of opening stock. Otherwise, simply follow the rules. Debit all losses. Reduction in the normal selling price is like a notional loss. Record that. Markup na markup account credit பண்ணுவோம். If this markdown, we will debit the markup. Record the sales as it is. By sales, how much? 3 lakhs. To buy balance brought on is nothing but markup on the opening stock. Markup on the opening stock. To balance brought on is nothing but markdown on the opening stock. To stock account look at nothing wrong. To stock account also you can put. It is only a memorandum account, not a regular books of accounts. You can put to stock account also. No problem. Here we can put even by markup account. Here by which account? Markup account 600 to stock account 600 also you can put. Sales 3 lakhs. Abnormal loss or the cost of what is abnormal loss cost? 1,000 plus 25% add panna. What is invoice price? 1,250. Adoda markup we will adjust in departmental markup account. Then from the purchases we marked down some items worth how much? 1,200 we marked down. 1,200 we marked down. So by markdown from purchase 1,200 you can record. Then wait. One third of the goods are included in the closing stock. One third of the goods are included in which one? Closing stock. See, one is wait. Markdown from purchase, how much? 1,200 you can record. One third of the goods remain unsold means how much would have been remain unsold? 5,000. 5,000 out of 15,000. That you can take it as to balance carry down, markdown on the closing stock. Markdown on which one? Closing stock, you can record. Markdown on the closing stock. Or directly you can record 800 here. Instead of 1,200 and debiting 400, what you can do directly? You can record directly markdown from purchase 800. Like that also you can do. If you tally this, you will get the departmental stock account at invoice price. Departmental stock account at what price? Invoice price. Please remember, we adjusted all markdown and markups during the year. Automatically, you will get the closing stock at invoice price. On that stock reserve, 28,600 into, wait pannunga. This is which price? 28,600 is invoice price. Cost plus 25%. On this, how to work out markup? On cost 25%, on sales 20 by 120, 25 by 125. 1/4 on cost, 1/5 on what? Sales. 28,600 is it cost price or invoice price? Invoice price. So cost la 1/4 pota, on sales it will be 1/5. Be careful on that. So this will be like 28,600 into 25 by 125. Tally this, you will get the gross profit.
Closing stock balancing.
Balancing. Since markdown has been already adjusted, closing stock will be at what? Normal invoice price. Normal invoice price. This is like cost plus 25%. Cost plus 25% is the value. Try to prepare a trading account. Let us see whether you are getting 58,880. The trading account, what should come? Opening stock at what price? Cost price. Purchases should be at cost price. Okay. Then sales is how much? 3 lakhs. Abnormal loss should be recorded at cost price. And the closing stock should be recorded at what value? Cost value. How to work out cost value? Selling price minus profit. Invoice price minus profit. Like that you can work out. First take up this, then we'll go to trading account.
அதே மாதிரி பிரான்ச் அக்கௌண்ட்ஸ்ல இந்த டிப்ஸ்
அப்படியா?
ரிவிஷன் கிளாஸ் தான்
போறாது. No எஸ் நோ.
ஓகே தான். ரொம்ப அக்கௌண்ட்ஸ் க்ளோஸ் பண்றதா பண்ணுங்க.
Shall we go to trading account? Copy பண்ணிட்டீங்களா? Shall we go to trading account? Shall we? Prepare பண்ணலாம். Opening stock, purchases, sales, abnormal loss இருக்கு. Closing stock ஓட cost equivalent how to find out? Simple. Invoice price minus loading. What is invoice price? 28,600 minus the profit is how much? 5,720. 28,600 வந்து cost plus 25%. In that markup is how much? 1/5 less பண்ணா you will get cost of the stock. 22,880. Tally பண்ணுங்க. You will get how much? Gross profit how much? 58,80. It is asked in the question also. Separate cater. Departmental trading account cater.
இப்படி போறது எனக்கு புரியுது. நம்ம நார்மலா போறப்போ க்ளோசிங் ஸ்டாக்ல இன்வாய்ஸ் பிரைஸ்ல எடுத்து அதுக்கப்புறம் கன்சாலிடேட்
Trading accountல போடும்போது we will record that wherever you prepare a trading account it will be at what price? Cost price தான். But if you record them at invoice price, if you record them at invoice price, consolidated P&L accountல போடுவோம். But generally opening stock wait பண்ணுங்க. Is it a transferred stock or purchased stock? இது purchased stock or transferred stock? Is it a purchased stock தான். Purchased stock will be recorded at what price? Cost price. Only when there is an interdepartmental transfer, there you will record that loaded price, then you will go for stock reserve. This is a purchased stock, it should be recorded at cost price only.
அப்போ like only when two departments are
Yes.
details are given நம்ம அப்படி ஃபாலோ பண்ணுவோம்.
Interdepartmental transfers மட்டும் தான் அப்படி follow. Interdepartmental.
Okay. அப்போ அப்படி இருந்தா like
See, when in this method is followed, you can, instead of doing a general P&L account, you can eliminate here itself there. Take up this trading account. This loading is not on interdepartmental transfer. Loading is not on which one? Interdepartmental transfers. Shall we? Copy it overall. When we practice a same model question, then it will be easy for you. Come to November 2019 question, that is in page number 99. Page number 99.
இதே மாதிரி क्वेश्चंस நார்மல் லாஸ் அதுக்கு என்ன சார்?
Normal loss we ignore. Normal loss we don't consider. Costing or accounts we don't consider in trading account. That full loss will be charged. Look at this. அதே மாடல் இந்த மாதிரி கொஸ்டின் கேட்டானா அதே மாடல் தான் இருக்கும். Try to do it. We can finish up in 5 minutes time. 10 marks. Departmental Ac markup for last 3 years has been how much percentage? 20%. The figures relating to Departmental Ac is given to us. Opening stock at cost, purchase at cost கொடுத்திருக்காங்க, sales கொடுத்திருக்காங்க. We can finish up in 5 minutes. Stock shortage was found. How much has been written up? 4,000. Like which one? Abnormal loss. Opening stock goods costing 12,000 has been sold during the year, but marked down how much? 1,600. Same information, only the amounts are different. Goods purchased for the year marked down by how much? 3,600 at a cost of how much? 30,000. Marked down cost stock costing 10,000 remained unsold. Nothing but 1/3. Same like the last question. If we look at only numbers are different. You can do it. Finish it off in 5 minutes time. just cut copy paste இருந்தா போதும்.
November 2019.
Tell me the opening stock amounts. நீங்க தான் சொல்ல போறீங்க. 1,50,000 plus எவ்வளவு markup?
180.
சொல்லுங்க. Purchases
430 560.
5 lakh. Then sales எவ்வளவு இருக்கு?
6 lakh.
Abnormal loss
4,000.
4,000 plus 20%. No, no. Opening stock markdown எவ்வளவு இருக்கு? Opening stock, anything marked down? Any opening balance marked down? The sales la marked down, opening stock marked down.
Opening stock. Goods costing
1,000?
600.
Abnormal loss la இருக்கிற markdown or loading 800. Markdown from purchases எவ்வளவு கொடுத்திருக்காங்க? 3,600. And the proportionate amount 3,600 into 10,000 by 30,000. 10,000 by 30,000. So as a balancing for we get how much? 38,800. 38,800 into 1/5 on cost, 1/6 on sales. Correct தானே? So this question is asked in 5 minutes, you get 10 marks.
Closing stock adjustment பண்ணி 30,000 3,600 mark பண்ணா 10,000
10 by 30. This is closing stock la இருக்கிற markdown proportion alone. And the markdown adjust பண்ணிட்டோம்னா we'll get the remaining stock as a balancing. That is it, invoice price. That into 1 by 6. 1/5 on cost, 1/6 on sales.
closing stock 37,200.
Yeah, which one is 1,600?
The mark markdown.
Oh. For 37,200 into 1 by 6. Sales only 3 lakhs. 6 lakhs.
6,50,000.
Prepare the trading account also next. Have we taken up this departmental trade stock account markup account? Trading account. What is the opening stock? 1,50,000. Purchases 4,30,000. Sales. Sales eவ்வளோ?
6,50,000.
Abnormal loss or a cost?
Closing stock.
Closing stock
31,000.
37,200 minus 6,200, 31,000. Tally this, you get gross profit.
Yes, 21.
Okay.
Sir,
Biscuits சாப்பிட்டா தொண்டை போயிடுவாங்க.
சும்மா ரெண்டு
சின்ன ஸ்வீட் ஆல்சோ வச்சுறாங்க. பேசிட்டே இருக்கணும்ல, அதான் வேணாம்னு சொல்றாங்க. கிளாஸ் எடுக்கிற எடுத்துட்டு நோ ஸ்வீட் நோ ஜூஸ். ஆமா பண்ணிட்டோம் பண்ண FGH பண்ணிருக்க மாட்டோமே, கண்டிப்பா பண்ணிருக்க மாட்டோம். We'll do it. Go to the question number. See here, listen, in this question what we are going to see is I will transfer to J, J will transfer to what? K. So listen, department K will have two profits loaded. Department K will have what? Two profits loaded. I to J, then what? J to K and the money. Read the question, you will understand, then we'll work out. FGH Limited has three departments, IJK. The following information is provided. Opening stock reserve is given to you already. For unrealized profit is given to us. Material consumed, direct labor, then closing stock is given to us. Sales is given only for what? K. Sales is given only for K. Area occupied, number of employees kuduthirukka. Stock of each department cost to the department concerned. Stock of Y transferred to J at cost plus 20%. Stock of J transferred to K at 20%. இது வந்து inter process profitல பண்ணிருப்பீங்க காஸ்டிங்ல. பட் அக்கவுண்ட்ஸ்ல
எக்ஸாம்பிள் சொல்லி தான் நம்ம கிளாஸ்
அப்படி என்ன? பட் யாருக்குமே ஞாபகம் இல்லையே.
இல்ல சார் இது ரொம்ப நாள் ஆச்சு சார் அப்படி அதனால.
Okay, we'll do it, no issues. ஒரு recap பண்ணலாம். புரியல. That's what I remember. I don't remember this problem has been solved. Okay, no issues. Go through that. Common expense of salaries and staff welfare 18,000 and what? 6,000. Prepare which account? Departmental trading P&L account. Okay. போடுறதா பரவாயில்ல. ஒர்க் அவுட் பண்ணி ஆன்சர் சொல்லுங்க. I don't remember. In the regular class, I have not done this.
ஹரி போடுங்க சார் ஓகே. சார் ரெண்டு பேர் கான்செப்ட் போடு சொல்லுங்க சார்.
ட்ரை பண்ணுங்க. ட்ரை பண்ணி ஆன்சர் சொல்லுங்க. Let us see. Yeah, because I've gone through the video also, past video also. This not done in the class. Past class we have not done. Try பண்ணுங்க. We'll prepare a departmental trading P&L account. IJH then. What are the departments? IJK.
சேம் பண்ணலாம்.
Try to prepare, Papa. Try to prepare and tell me the net profit. அப்புறமா stock reserve போட்டுக்கலாம். Net profit without stock reserve. Work out first. Stock reserve let us eliminate separately because it is not markup markdown. It is interdepartmental transfers at the loaded price.
இதெல்லாம் போட்டு கடைசில ஜெனரல் P&L போய் இது பண்ணுவாங்க.
Try பண்ணுங்க போடுங்க. First, you have to work out transfer price of I to J, அதான் sales of I.
சார் ரெண்டு ஏரியா விட பிரிச்சுட்டு
That you will do it only in P&L account. P&L account la the apportionment of rent and staff welfare will come. For fixing the transfer price, you have to work out I to J first, then J to K first. Try பண்ணுங்க. Do I to J first. Opening stock, how much is there? I. Purchases of material.
16,000.
16,000. Direct labor.
9,000.
9,000. The transfer is what we have to work out. What is the closing stock given?
5,000, 20,000.
5,000 for I. First, let us work out I to J. Okay. What is the cost of goods sold for the department?
55,000.
Nothing but opening stock plus direct material plus direct labor minus closing stock. What is the cost of goods transferred? 25,000 வரும். இதுல profit margin எவ்வளவு ஆட் பண்றாங்க?
20%.
Profit 20%. This you would have definitely done in costing, but we have not done in accounts. So this will give us transfer price 30,000. This transfer price will be recorded. Credit the giver, debit the receiver. I will be credited, J will be debited. Then gross profit is how much? 5,000. This is nothing but this profit on transfer. J to K, what is the opening stock? J would opening stock
8,000.
8,000. Then
Plus 20,000. K is
labor
10,000. Plus 20,000 minus 20,000.
closing stock how much?
20,000.
So cost of goods transferred from J to K will be opening stock plus material plus 10,000 direct labor plus the transferred goods from other department becomes a direct expense for the other department. J minus 20,000. What is the cost of goods transport?
48,000 plus 20.
48,000. Eவ்வளவு profit margin?
20% on sales.
So 25% on cost.
1/5 on sales will be nothing but 1/4 on cost. 1/4 on cost எவ்வளவு வரும்? 12,000. Transfer price is 60,000. 60,000. So transfer price of J is 60,000. 12,000 வரும். This 30,000 and 60,000 we fix it. Then for department K, what is opening stock? What is opening stock? Purchases கிடையாது, direct labor கிடையாது, transferred goods only. What is the closing stock? 5,000. 5,000. Sales is given to us. Sales given to us. Sales of K, how much is given? 80,000. The tally panna, GP will come. What is the gross profit? Salaries. Salaries என்ன ratio apportion பண்ணணும்? Based on number of employees. Apportion it, how much you will get? 3:2:1. 9,000.
6,000, 3,000.
Staff welfare also based on,
3,000,
sorry, rent is based on area occupied. Rent is based on area occupied, how much?
3,000,
3,000, 1,800,
1,200.
1,200. Net profit is a balance. Net profit or loss?
So first department is loss, second and third profit. First department is 7,000.
Opening stock is reserve is given to us. Try to find out the closing stock reserve. Closing stock reserve. Stock with which one? Which one will be at loaded price? J. And on stock with K.
சார் இந்த கொஸ்டின் ஆனா ஆரம்பத்துல வந்து ஐக்கும் ஜேக்கும் ஓபனிங் சார் காமிச்சிருக்காங்க. ஐக்கு எப்படி சார் பாசிபிள்?
Simple. Who transferred the stock?
ஐ டு ஜே.
So who charged the profit?
ஐ தான் ப்ராஃபிட்.
That is the profit charged on I to J. Second one is the profit charged on J to K.
பட்
Stock is with other department. Profit is charged by transferring department.
ஓகே ஓகே ஓகே.
That's correct, but he's asking why stock reserve is given in J.
No, sir, like last year கேக்கு ட்ரான்ஸ்ஃபர் பண்ணிருப்பேன் அந்த க்ளோசிங் ஸ்டாக்ல ப்ராஃபிட் இருக்கும் அதுதானே இந்த வருஷம்
Okay, sir. Correct. So try to work out stock reserve, closing stock reserve on stock with J and stock with K. Any doubt so far? In the 30,000, do you understand how do we get the transfer price? So that is income for I, expense for J. Then 60,000 is a transfer price of J to K. 60,000 income for J, and of course for K it is like a cost. I want the stock reserve on the stock with J and on the stock with K. The correct work out பண்ணா நான் ப்ராப்ளத்தை கிளாஸ்ல சால்வ் பண்ணிருக்கேன்னு அர்த்தம். இல்லைன்னா இல்லை
ட்ரிபிள் த்ரீ
இல்ல 333 மட்டும் திங்க் பண்ணு. இட்ஸ் நாட் 333.
நம்ம கேல இருந்து ஜேக்கு போட்டு அப்புறம் ஜேல இருந்து ஐக்கும் இருக்கும். அதுதானே நீங்க
ஆமா.
think பண்றீங்க.
க்ளோசிங் ஸ்டாக் வித் J எவ்வளவு இருக்கு? 20,000. This is transferred from which department? I. And also it has its own expenses. The closing stock with K is transferred from which one? J. That will include the profit loaded by I also. The stock with K will include profit loaded by I as well as what? J.
So 144.
Think பண்ணு.
So closing stock on stock with K ன்றது 1527.
இல்ல.
ஸ்டாக்ல வந்து
Closing stock வந்து 20,000 இருக்கு. அதுல what is the profit element? Normally
3333.
not 3,333. Think.
க்ளோசிங் ஸ்டாக்ல வந்து மெட்டீரியல் காஸ்ட் இருக்கு, அந்த பேலன்ஸ் எக்ஸ்பென்ஸ் காஸ்ட் இருக்கு.
இருக்கலாம். Yes. See, if nothing is specified in the problem, will you follow average cost assumption or FIFO assumption? FIFO. Always, first purchased goods will be sold out first. Opening stock will not be carried forward till the end of the year. Okay, closing stock will be out of what? Current year production. Closing stock is out of which production? Current year production. Think in that line, you will get it. You think and work out the answer. Wait பண்ணுங்க. Listen, pay attention. Look at stock with J. What is the raw material expenses of J?
20,000.
20,000. Expenses எவ்வளவு spend பண்ணிருக்கோம்?
10,000.
10,000. Okay. 30,000 is the expense. 30,000 is the expense of the department. Wait பண்ணுங்க. Look at the transferred stock. Wait. Yeah, transfer from I. Everybody paying attention. Transfer from I எவ்வளவு பண்ணிருக்காங்க? 30,000. That is what is the total cost? That is total current cost. Current cost ஓட total எவ்வளவு இருக்கு? 60,000 இருக்கு. If you look at the proportion of transferred goods to current cost, எவ்வளவு proportion இருக்கு பாருங்க. That we call it as content ratio. Content ratio is nothing but transferred goods to total cost. என்னோட total cost 60,000ல transferred goods cost எவ்வளவு இருக்கு? Sir, what is my total cost of J? Current year cost of J?
30,000.
Material plus expenses or 30,000. Transferred from other department is 30,000. What is the total current cost? 60,000. 60,000ல transferred goods எவ்வளவு occupy பண்ணுது பாருங்க. 30K out of what? 60,000. So what is the content included? 1 by 2. 1 by 2. What do you mean by 1 by 2? Transferred goods occupy 1 by 2 of total current cost. ரொம்ப சிம்பிளுங்க. Look at 30,000 expense, 30,000 transferred goods. இப்போ transferred goods எவ்வளவு percentage occupy பண்ணுது? Half occupy பண்ணுது. So closing stock எவ்வளவு இருக்கு பாருங்க. Closing stock of which department? J எவ்வளவு இருக்கு? What is the closing stock of J? 20,000. Is it entirely transferred goods? This will contain 1 by 2. This will contain what? 1 by 2. It will be how much? 10,000. Otherwise, your cost structure, what is the total cost? 60,000. That includes transferred goods? 30,000. Only this will have profit element. Only this will have which element? Profit element. Raw material and expenses are which one? Purchased from outside market. That will be at cost. So closing stock of J includes 1 by 2 of element from the other department. How much? 10,000. This is 10,000 from which department? I. 10,000 from I. What is the profit margin charged on this? 10,000 into எவ்வளவு percent profit?
20% on cost.
20% on cost. So 1/5 on cost, it will be 1/6 on sales. 1/6 on sales. So 10,000 into 1 by 6. எவ்வளவு வரும்? 1667.67 வரும். Once again, I repeat. Look at J's cost structure. What is raw material and expenses? 30,000. Transport goods? 30,000. What is the total cost? 60,000. So the total cost of J includes transfer from by how much? 30,000. The content of transport goods to the total cost is how much? 1 by 2. Content of transport goods to total cost is how much? 1 by 2. So closing stock of J, 20,000 is given. In that, what is the transfer content? 1 by 2. 60,000 la 30,000 transfer na. 20,000 la how much? 10,000 is transferred goods from I. 10,000 is transferred goods from I. Only the transferred goods will have what? The profit element. 1/5 on cost. 1/5 on cost will be nothing but what? 1/6 on sales. 1/6 on sales. So 1/6 on transfer. 1/6 on transfer price.
overall answer 1000 ஆ சார்?
பார்க்கலாம். இதுவே 1667 வந்துச்சு.
இல்ல சார், அந்த க்ளோசிங் சொல்லுங்க சார்.
பார்க்கலாம். பார்க்கலாம். I do not know the answer. Let us see. Then on stock with K, wait பண்ணுங்க. On stock with K, pay attention. What is the current content cost? 60,000. 60,000 is the current content cost. Yes, 60,000. Now, what is the stock with K? What is the stock with K amount?
5,000.
5,000. In this profit element by J to K. J to K, எவ்வளவு profit element charge பண்ணிருக்காங்க?
20% on sales.
Profit element J to K பாருங்க எவ்வளவு கொடுத்திருக்காங்க? 20% on sales. So 20% on sales போட்டுக்கலாம் டைரக்ட். இது selling price ஆனே. 5,000 into 20%. 5,000 into 20% how much? See, what is this? What is the stock with K department? 5,000. Is there any separate expense are there for K? K la separate expense irukka? But you have to work out content ratio like this. The entire 60,000 is which stock? See, look at K's current cost. What is K current cost? Transport goods how much? 60,000. Is there any own expenses are there? Or expenses directly incurred for K is there? No. So which means entire closing stock represents transport stock only. So stock with K, 5,000. In this, what is the profit element charged by J to K? 1,000. Balance all 4,000 இருக்கும். Wait பண்ணுங்க. இதுல what is the profit element from I to J? The stock direct J to K to move ஆகல. I to J move ஆகி then J to K move ஆயிருக்கு இல்லையா? So I to J எவ்வளவு move ஆயிருக்கு? I to J 4,000 into what is the content ratio? I to J level of content ratio 1 by 2. 1 by 2 into what is the profit margin?
20%.
1 by 6. 1 by 6. 1 by 6. 1 by 5 on cost, 1 by 6 on sales. How much it will come? 3,333. 333.33. 333.33. This is a profit element charged by J. So wait பண்ணுங்க. On J stock, only one profit element will be there. Who's charging this profit element? Who's charging this profit element? I to J தான் இருக்கும். Stock with K will have two profit elements. What are the two profit elements?
I and
Goods move from I to J, then J to K. So J to K would have profit element எவ்வளோ? 1,000. J to K would have profit element 1,000. Then this will have I to J profit element also. Out of 5,000, 1,000 profit eliminate பண்ணா 4,000 is like cost of J to K. Cost of J to K. This includes what is the content ratio? J ல எவ்வளோ content ratio இருக்கு? Transferred goods content is half. இல்லையா? Half. So 4,000 ல transferred goods of J is 1 by 2. அதுல what is the profit margin? 1/5 on cost, 1/6 on sales. So what is the profit? 333.33. 333.33. So what is the total profit? 1,000 plus 333.33. 1,000 plus 333.33. Now, listen to it. We'll prepare a general P&L account. We'll prepare which account? General profit and loss account. By net profit of which department is available?
J and K.
J, how much is there?
4,200.
4,200. K எவ்வளவு இருக்கு?
1,800.
1,800. Then to net loss of which department? I. What is the net loss of I?
7,000.
7,000 net loss of I. Then by stock reserve. By stock reserve, J how much is given?
J,
I how much is given?
2,000.
2,000. J how much is given?
3,000.
3,000 given. Then to stock reserve, this is for the closing stock of I and which one? J. So I ஓட எவ்வளவு இருக்கு? I to J. This 1667.67. J ஓட எவ்வளவு இருக்கு? Total 1,333.33. Tally பண்ணா you will get overall net profit. You will get which one? Overall net profit that you can do it. Take up this. Once again, I repeat. Once again, I repeat, paying attention. Raw material plus expenses, 30,000 is the cost. That will be at cost price only. Transfer from I to J, எவ்வளவு இருக்கு? 30,000. So to current cost of J includes how much content? 1 by 2. 1 by 2. Yeah, content ratio is 1 by 2. So J oda closing stock எவ்வளவு இருக்கு? 20,000. This includes 10,000 of goods transferred from I. So 1/5 on cost, 1/6 on selling price. This is the profit element. Stock with K includes two profit elements. How two profit elements? J to K 20% on sales. Content is 4,000. That is JS order cost content is 4,000. Adile 1 by 2 is the cost that belongs to J. 1 by 6 loaded 333.33. So total profit loaded is how much? 4,333.33. So 1,333.33 is the profit loaded. Take up this.
So present பண்ணும்போது எக்ஸாம்ல
இதே மாதிரி present. Or you can present in a statement style also. Particulars, 3 columns you can maintain. Net profit, add opening stock reserve minus closing stock reserve, like that you can do, and you can give columnar answer also. Pay attention. I'll repeat once again for those who are not understanding. J க்கு இருக்கிற ஸ்டாக் யாரு ட்ரான்ஸ்ஃபர் பண்ணது? I transferred. Okay, J ஓட டோட்டல் காஸ்ட் பாருங்க, ட்ரேடிங் அக்கவுண்ட்ல எவ்வளவு இருக்கு? 60,000 இருக்கும் கரண்ட் காஸ்ட். அதுல என்னோட கூட்ஸ் எவ்வளவு இருக்கு? 30,000. அப்பனா 1 by 2 of your total cost represents my goods. So closing stock valueல 1 by 2 will include what? Transferred goods. அதுல 1/5 on cost na 1/6 on sales. Closing stock with K எவ்வளவு இருக்கு? 5,000. இது J transfer பண்ணதா. There is no separate expense of K. So 20% is a profit loaded. அப்போ cost to J எவ்வளவு இருக்கும்? 4,000. இதுல I to J எவ்வளவு transfer பண்ணிருப்பா content? 1 by 2. I to J move ஆயிதானே J to K போயிருக்கும். So 4,000ல 1 by 2 into 1 by 6, 333.33.